Hello, everyone, and welcome to part 2 of how to make money in real estate investment in Zambia. On this episode, I'm going to share 3 more techniques and give you a few secrets that other people don't want you to know. Now, this is a 2-part episode, so make sure you watch part 1, which is provided on the link above. If you like such content, please subscribe, hit the like button, and also share with friends so that you can discuss these things. And let me know mafunso, or you want to say something or discuss, please just post it in the comment section below. Now, 2 quick reminders. Real estate investment is a long-term game and you have to be patient, okay? And secondly, you need to seek professional advice before you make any investments. The following are just my opinions and my views on what I think you should do or you could do. So let's get straight right into it. Method number 4 is build and sell. In this method, you're going to buy a plot, build a house or a couple of houses, and then sell them. A variation of this is where you buy an old dilapidated house, demolish it, build a house or houses, and then sell. The biggest advantage with this is that you get to design and build a house that you think might sell out there on the market. So meaning you can actually incorporate modern designs or trending things in the construction sector that could actually sell or that are sellable and that people are actually willing to buy. The main disadvantage with this, or the biggest risk I would say, is underestimating the construction cost and overestimating the market demand. When you combine these two things, you are at a risk of making heavy losses, both in terms of money and also in time. Another potential risk with this is that some home buyers might be a bit cautious about buying a brand new house. In as much as it looks good, nice, and new, there's a risk that the person who was building the house might have cut some corners here and there to keep the costs low so that they could produce this house quite quickly and sell it and bring it on the market. Now, a brand new house looks nice, yes, but sometimes defects creep up after a long period of time. So if there's a problem, say for example with the foundation, the cracks and the like won't show up in the first couple of months and the like, and that's when the house is most likely on sale. So you might have to be a bit cautious about that as a buyer. If you're the one selling this property, you have to make sure you follow building regulations and safety standards. Make sure you're building a quality product so that you don't pass over problems to your buyer or the next person. Method number 5, build and rent. This is by far the most common thing when you ask any Zambian or any person saying, you want to get into real estate investment, what do you want to do? They're going to tell you that they want to build some flats and put them on rent. Now, there are 3 levels to this, and we're going to start from level 1, going up to level 2, up to level 3, and then you'll see why I'm calling them different levels. And one of these methods is actually a well-known secret. Let's begin. Level 1, residential apartments. In this technique, you buy a plot and build a house or a couple of houses or semi-detached flats and put them on rent. If you're debating on whether it should be one house or multiple houses, I would say that it is better to have multiple houses. That means like a semi-detached flat or even one is better than a single family home, because with a single family home, you will have a challenge of cash flow. If the tenant moves out, you won't have any money. So it's always better to weigh your options and see also based on your financial capacity and the like. But I would say semi-detached flats are way better. Of course, the disadvantage with this is maybe the cost of construction will be much higher if you're building more flats, right? But you have to weigh the options, and you can also balance in terms of phasing of construction. We'll discuss that in another video, but for now, just know that you can also just build some flats and rent them out and you make some money. And that's level 1. Now, if you wish to learn more about building for rent, I have an online class titled Building for Rent Business. And in this class, I explain more practical and in-depth knowledge about building houses for rent. You can access this online class by going to tinyurl.com/Born the Builder. I'll post the link in the comments below. I look forward to seeing you there and you attending class. Level 2 is boarding houses or student accommodation. If you're lucky enough or strategic enough to have a property or a plot near a college or university, this might be the best solution for you. Building a boarding house could possibly cost you the same as building your semi-detached flats. But the advantage with a boarding house is that you're actually going to earn more money because you're charging students per bed space and not charging, say, a family to rent the entire house. For example, suppose you have a 3-bedroom house and you rent it out for 5,000 kwacha to a single family. If you were to convert it into a boarding house, and you could probably fit 2 bunk beds in each bedroom, you could then have 12 bed spaces. If you charged each student, say, 750 kwacha per bed space, it means you'll be making 9,000 kwacha, almost double the amount you'd be charging for a single family home. Which one of the two do you think makes more business sense or makes more sense to you? I'd like to hear your thoughts, so please post in the comments. Of course, the main disadvantage of having a boarding house is the likelihood of increased wear and tear in terms of the house and the fittings. But you can mitigate this by screening your tenants and also setting some rules for the tenants. And you figure out what works best for you. Of course, weigh the options and then decide. Now let's move to level 3, under build and rent. This has been a well-kept secret by those people who've actually tried it and actually have these investments. But today, I'm going to share this information with you. Quick reminder, guys, if you haven't subscribed yet, please click the subscribe button, hit the like button if you're interested in this type of content, and also please comment and share with friends. And yeah, level 3, midadada. If you haven't caught on yet, let me break it down for you. As you may be aware, there are many unplanned and densely populated areas within the country, and these areas are called compounds or makomboni. Now, makomboni is where you find a lot of poor structures, and these are sometimes referred to as midadada. So you might be wondering, Bond the Builder, what is the connection between midadada and real estate investing? Relax, let me explain. You can actually go into the combine, buy 1 or 2 midadada, demolish them, and build a block of 1 or 2 room apartments. I didn't say 1 or 2 bedrooms, but 1 or 2 room apartments. In fact, let's not call them apartments. They're actually bed sitters. So you build a block of bed sitters, and then you have shared facilities such as a cooking area, washing area, and toilets. So you have to buy them obviously within proximity of one another so that you can make one entire plot. And in that space, you can build a block of these 1 or 2 room apartments. 1 or 2 room bed sitters, and you can rent them out to the low income earners who live in the compounds. Now, the biggest advantage with this is that you will never run out of tenants. As long as you keep the rent price at a reasonable amount, a lot of people will always come for your property. Let's look at an example of building Kokomboni versus Mayadi. Suppose you build a 3-bedroom house, Mayadi. An entire house will go for around 5,000 kwacha per month. Suppose you use the same amount of money to build a block of 10 bed-sitters Mukomboni and charge, say, 700 kwacha per room. That translates to 7,000 kwacha per month. This is probably a little more than what you would get renting out a single house with expensive fittings. Remember, these are basic houses without fancy fittings. You're likely to recover your investment much faster for Kombon because you might even spend a little less on construction. So those are the 3 levels under build and rent. Now, there's another thing I'd like to discuss, but technically it should be level 4, but it's so big that it's its own way of making money from real estate. I'd like to introduce you to Airbnb. If you've never heard of Airbnb, allow me to introduce it to you. Airbnb is just an app on the phone or a website which people use around the world to find houses and rooms for rent. Now, this is mostly used by tourists who are traveling. So, abamanji tikamba $, dollar, not makwacha. Now, under Airbnb, there are basically 3 ways of making money. Number 1 is renting out a room. So if you have a house near the CBD or tourist attraction or just places where tourists usually go to, then you can actually rent out your room and have these people pay you for staying a night or 2 in your place. Now, this is most convenient for people who live in areas which are safe and also popular with tourists or people that are traveling for business. Another thing is you set the rate on Airbnb. So they'll pay you the amount that you set on your profile on Airbnb for the particular room. Method number two of how to make money on Airbnb is to fully furnish your house and rent the entire thing out. Now, you can also list it on Facebook as a fully furnished apartment, and you're likely to get some sales and people coming to visit. Now, the thing with Airbnb is that if you rent out a fully furnished place, you're more likely to attract people who travel in groups and the like. The good thing about having a fully furnished apartment or house is that this is something that can be done even for a house that you're trying to sell. So you have temporary people visiting and renting out your apartment for a day or two or a night, and you'll be earning some income while waiting for a buyer for your house. Now, the advantage of a fully furnished apartment is that you can actually charge more than an empty house. So you can put some markup there for the furniture damage and all those things, and you actually earn more. And yet, the wear and tear will actually be less because these people are temporary visitors. They only stay for a night or two, or at most maybe a week, and they're gone. So it's basically like a hotel, but cheaper and more space. Now, guys, this brings us to the craziest part about Airbnb, and this is method three, which is subletting. Subletting means you rent a place and then rent it out to another person. So you become a mini landlord. Now, subletting is usually not allowed in most tenancy agreements, but if it's allowed and if you're transparent with your landlord, then you can actually sublet and list the property on Airbnb. So that means you could actually earn money in dollars and then pay the landlord in kwacha. So you need to balance those forces and then you should be able to make a profit. Word of caution: if subletting is not allowed in your tenancy agreement with your landlord, then you shouldn't be subletting. Otherwise, you drag yourself into court issues and the like. But if you're transparent and your landlord is agreeable, you should agree on a fixed price in terms of the rent so that you can manage whatever inflows come in from the Airbnb listing. Another important thing is to try and make sure you can get a good estimate of how much revenue you will make from listing on Airbnb. Remember, it's not every Airbnb that's listed that is going to get you customers. So, as I said, you have to be in a good location, you have to provide some good services, and yeah. Now, what is the biggest disadvantage of Airbnb? I think the biggest thing revealed itself during COVID 19. So, no one was traveling, or the people that were traveling were very few. A lot of businesses that were working under Airbnb actually had to close. So, if, for example, you were subletting and no tourists were coming, it means that you weren't getting any revenue, yet you had to pay rent. So automatically, that means you're running at a loss. So a lot of businesses had to close, which were using that model. But if you're a landlord, all you'd have to do is just wait. So the biggest advantage with Airbnb would be in seasons when people are not traveling. You're not most likely not going to get a lot of income or the projected revenue that you're expecting. Just like anything else in this life, there are risks involved. So you have to weigh the options. The main advantage with Airbnb is that your target market actually increases and you're not attracting local people only, but also foreigners. So when tourists come into the country, they come with dollars and the earning power there is much higher. The other good thing is that the wear and tear on your property is most likely going to be very minimal because people only stay in a particular place for a short while and then they leave. Now, here are some important things to note. If you go ahead and invest in real estate, you realize that there are many combinations and things that you could do and actually combine these methods to come up with a formula that works best for you. Remember, not everything that works for me can work for you and vice versa. So you have to try and reason and see the advantages and disadvantages and weigh between the two. Now that you have seen the different ways in which you can make money from real estate investments, which method do you think is the best for you? I'd like to hear your opinion and your thoughts, so please post them in the comments. Now, finally, I truly hope that the information that I've shared with you will help you make more informed and better decisions when it comes to your real estate investment journey. You really need to think about all the different ways and see what combination works best for you. So all I can do at this point is just wish you good luck, and please feel free to share the journey, like, subscribe, and share the channel with friends, and we'll see you next time. So bye bye.